at long term for India, if you look over a 20-year period, India is one rare emerging market which has actually kept pace with the US in terms of returns. If you look at MSCI India, it has delivered something like 9.3% annualized in dollar terms over 20 years, compared to the US, which has delivered close to about 10%. And if you look at EM, it has delivered, EM and Europe has delivered close to about 5% annualized. And the beauty of this is that if you look at, this strong deliverance, that is driven by earnings growth. If you look at Indian MSCI India earnings growth over this period, it has averaged something like about 8-9% on an annualized basis. Whereas if you look at US, the earnings growth over this period has only been about 6.8%.
Yes.
And if you look at EM and Europe, earnings growth has averaged around 4%. So if you look at aggregate price to aggregate earnings over this period, 20-year period, India is at 1.1.
Yes.
Whereas if you look at US, it's something like at 1.8. If you look at Europe and EM, it's about 1.3. So the growth over this period has been driven by actual earnings rather than price multiple going up.
How much value has this sell-off unlocked in what has typically been perceived as a historically very richly valued market? And if it is unlocking value opportunities, what sectors and names are on your shopping list or should be on a shopping list?
Sure. If you look at the large cap, the Nifty 50, the 1 year forward earnings multiple has come down from 21 times to about 18.3 times, which is roughly in line with the 10-year average. Of course, on the mid and small cap space, it's still yet to hit the 10-year average. And if you look at, growth in India, it is actually picking up after bottoming up in the September quarter. If you look at the December quarter, you've seen the GDP already bounce back about 6%. If you look at government spending on capex, that is picking up strongly. If you look at other factors like the PMI numbers, that's remaining in the high 50s. So definitely growth seems to have bottomed up. And if you look at going forward, you would see earnings growth also pick up. And the sectors which we would be looking at under these circumstances would be financials. You do have some pressure coming from rate cuts, which is going to happen in India. So the margins will be under pressure. But if you look at the valuations, they are relatively fine. And the other sector which we would look at is consumer discretion. Because if you look at the government focus, that is also shifting towards boosting up consumption in India.